Good morning, everyone, and welcome to the Trade Out Loud Futures Trading Room. My name is Anka Metcalf, and today is March 17th, 2026. Happy St. Patty's Day, everybody. And we're waking up to a market that has been moving higher since 8 a.m. in a power trend. So good morning, everyone. Quick sound check. Just want to make sure everybody can hear me. You guys can see the screen. Perfect. All right. So on our calendar today at 10 o'clock, we have the pending home sales, not likely to impact the market, but we are one day away from the FOMC meeting, from the economic projection meeting, from the statement, and obviously from the federal fund rate decision. All right. So when we look at the market today, we see NASDAQ that has already popped higher, 115 points. We have the E-mini S&P, which is 32 points higher. And we have the Dow, which is 256 points higher. So we're roughly about 0.5% up in the major indices. And then in Russell, 0.5% up with 12 points. We're seeing that gold, it is stabilizing above the 50 simple moving average. We have support established in yesterday's trading session so far into the 49.60 area. We also have support into the 48.60. We have support into the 46.78. And the last pivot support that we have on this chart is 44.16. Now, if you look at the macro structure, you will see that basically we're trading within the massive volatility range that we have been trading into the first couple of days of February. So we do have a high of 56.26, and we do have a low here of 44.23. Since this volatility move that we've had into the markets, we have been range bound. Yes, we are still trending higher, but we could potentially expect a massive move into the gold market and in general into the metals market tomorrow, because we have the federal fund rate, we have the FOMC that is likely to create volatility throughout the indices and also throughout the metals. All right, next up, we're going to shift our attention to oil, and there we're going to get into a micro analysis into the futures indices. Oil has been moving sideways, and we're going to take the daily chart here for the last couple of days. Now, oil, very similar to the volatility spike and downward move into gold, has done pretty much the same thing. It had a volatility spike almost reaching $120, went to 119.48, and it came down into a low of $76.73. Since then, it has compressed, trading within the doji high and the doji low, above the 10 exponential moving average, leaving a gorgeous traction to the upside, because we have the 200 SMA, we have the 50 SMA, 21 SMA, and the 10 EMA all fanning out, showing that the price is still holding into a power trend onto the daily. But within the last few days, so we have advanced from this compression higher, and we have been sideways for the last couple of days. Interestingly enough, is that as long as we hold above from the technical standpoint, the 10 EMA, we could still talk about a power trend on the daily in an advanced higher. And by the way, this here is an historical move that we had. It is an incredible almost $39 range in here. So we break above the high, yesterday's high over 102.44, panic is going to set in, and therefore this may create a pop-up in oil to the prior high, to the 119.48. However, if we break below the low, we still have below yesterday's low, we still have a safety net into the 10 EMA, because as you could see within this month, last couple of weeks, we have been trading and the dominance has been established above the 10 EMA. So the 10 EMA has established itself as support for the ongoing move. All right, and now let's get on to our analysis into the major indices. We are still seeing the Christmas light effect. We see a very strong level of support into the 24,000, and in the upper side of the 24,000, 24,300. We have a rising 200 simple moving average that is creating the perfect layout for a continuation higher and for a bounce. Needless to say, and we have analyzed this in yesterday's session, needless to say that the weekly chart is relatively strong, right? You could see almost a double bottom formation. We're not into a double bottom because in order to have a double bottom, we need to have a pivot formation, and we don't have that yet. But we need to see the price above last week's high, and that is 25,218. If we get that print today or tomorrow, the market is going to digest the last few weeks. And I mean 1, 2, 3, 4, 5, 6 weeks of congestion. And we may be ready to project higher into these resistance areas right here, into the 26,000, which is a big line in the sand. And when we already have an all-time high that was established back in October, end of October of 26,399. So this is what the market needs in order to start moving higher. And again, line in the sand is going to be tomorrow's rate decision. If the market is going to love the new rate decision, then most likely we will start breaking out. Also, from the monthly chart, I'm going to bring it very quickly here. Notice that we are still above the 10 exponential moving average. That shows dominance and power trend on higher time frames. So even though we have been trading sideways since the end of October, we are still holding on incredibly strong, and we are in a massive power trend onto the monthly. So as you can see, we went a little bit into the analysis, I wouldn't say top-down analysis because we started with the daily, but you could see the strong structure, and the structure is present in all the indices. Now for today, what is the level that is most interesting to me? I would like to see the price action take out 25,000. We're almost there where we have a high 25,025, but I want to see the price take out yesterday's high into the 25,035. If we do that, we are going to have a pretty good tradable void for about 200 points. And then the frothy side for another about 60 to 70 points to the upside. So we do have a lot of material to work with, especially NASDAQ. We're doing good. We have the power trend. The market just opened right now. The New York trading session is open. We are 2 minutes in, and we already have a 67-point price action fluctuation within this 5-minute candle. Now let's take a quick peek before we start gearing up for some trades. And one other thing that I wanted to pull out is the hourly chart, because we have to have a little bit of patience today because the market has been rallying for over an hour and a half, and we need to see a good setup in order to execute a trade. So at this point in time, we're going to let the market do its thing, calibrate for the first 5 to 10 minutes until probably I would assume around 9:45 when we have the first potential reversal into the market. If not, we're going to look at the market around 10 o'clock. All right, so the mini S&P has a very similar structure. We're just going to look onto the daily. We have already popped above yesterday's high, so we are into a continuation pattern, probably towards 68.30, where we have a lot of resistance and minor resistance. Look to the left-hand side. This is back from January, so we need to take all that out. But notice one thing, beautiful 200 SMA rotation off of the 200 simple moving average. I mean, this is so easy to read. This is the happening place. We had a pretty weak close here with the topping tail on Friday. And then on Monday, we came, we lifted, we traded above Monday's high. We went into the 10 EMA and literally we closed from where we left off. And now it's time to get to the to this resistance area. So the next resistance is 68.25. And if we get a close above the 21 SMA, we can actually talk about a continuation move into the 68.52 and then 6,900. We're back, baby, into the 6,900 if we manage to close today above the 21 SMA. And of course, rate decision tomorrow is gonna speak volume. All right, so as you can see, the 5-minute power trending, we have a nice fanning out of the moving averages in all the indices. And then in the Dow, let's talk about some levels in here. We have, again, the 200 SMA reaction, and we have the nice move into the 10 EMA. We're tackling the 10 EMA as we speak for today. And keep in mind, we still have some resistance here into the 747,700. So support, we have 46,430. And for resistance today, we're looking for a continuation move into the 48,000, and where we have some resistance. And if we take that out, I think that the Dow could pretty much put an impressive move higher into the 48,300. So look for that continuation, whether it's going to happen today or tomorrow. It's beautiful. And again, you know, we had almost a continuous an hour and a half move. We have digested the prior high here, which landed into the declining 200 SMA, really powering through. Look at the range of this candle right here. In the first 35 minutes, we have 300 points move to the upside. Pretty good, pretty consistent, pretty substantial. That is a power bar move. And right now on the 5-minute, like I said, fanning out of the moving average is gorgeous. We had a rotation off of the 10 exponential moving average. Now, keep it in mind, as the price action is moving higher, within the last 5 minutes, we put up an 171 point move. Now, this was a continuous move, was part actually of a rally that started at 855. So we had 1, 2, 3, 4, 5, 6, 7. And then the 7th bar, oh my God, it's just so big, right? Because if you look, like we could fit like 4 or 5 bars prior to the near trading session open in this power bar right here. Because look at the rate. This is 171. This is 62. This is 28. This is 27, right? So we're picking off. Now, what am I noticing here? That the price action is extended from the 10 exponential moving average. And oftentimes when the price action takes off too fast, then the price action either needs to digest into a higher range, and the moving averages would just catch up with price, or we need a pullback. So let's see what's going to be. Okay, what is this market up to? And then we have Russell, just going to put it here on the daily, still struggling with the 10 EMA. We still have strong area of resistance from a volatility spike lower into the 53, that is 25.53. We have another volatility spike down. This was the slingshot lower and then back higher. This was the forced sell action that a lot of institutions do in order to accumulate more contracts or more shares, depending on what they're trading. But the line of the sand here today is going to be the 25.50. This is going to be the resistance area. If we trade over 25.50, and we just made it to 46.9. So we need to take this out, the 50 out. We take the 50 out, huge fulcrum area. Then we could see the price action move higher. For, I would say in increments of about 10 points, because that is where we have the next resistance area. So it's going to be 10 points by 10 points. So the targets are going to be set into the 2560, 2570, and so on, all the way into the 2600. But anyways, really nice start to the day. I hope you guys are ready, because we're just about to unleash our powerful methods to try to get into some trades and make some R's today.